Afternoon. This is Chris Robinson, Robbins Ag Marketing with today's post-close grain and livestock comments for Friday the 13th. Well, it started out looking like it was going to be a interesting day, and it finished up as a really interesting day. The driver, of course, is crude. Crude for the week right now trading at 98, which is up about $6 on the week. But here's the deal: we've had a $43 trading range in crude oil this week, and we are sitting at 98 bucks, right in the middle of it. So as we head into the weekend, the market is equally bet up or down. A lot depends on what happens on the news over the weekend. Stock market all over the place today, currently down about 180 in the Dow. S&P is down about 50, but again, a wide trading range. We still have not had a 10% correction. Now, a lot of people don't like it when the market goes down at all, but if you look at the percentage-wise moves, we have yet to take 10%, certainly not anything near a 10% is a correction, 20% is considered a bear market correction. So I'm going to put those levels in my letter tonight when I do the Friday letter. In any event, a good rally in crude oil helped pull new crop corn and beans back up towards their high. New crop corn finished at 491 and a half, up a penny and a half after trading down to 84. A good close, the highest settlement on a weekly basis we've had in 22 or 23 months. I'm not calling a top. I never do that. But if you've done nothing, the contract low down in January, 445, came within 5 cents of the contract low from the previous July. So we're 50 cents off that. It feels like $50, but 50 cents is 50 cents. We will see if we can go back and test the contract high in this contract, which is 512 and a half. So we are at the top of the 2-year trading range. In new crop beans, finished the day down 6 cents at 11.61. However, earlier in the day, it looked like we were going to roll over hard. We traded down to 11.54. We finished at 61. Again, this is all being driven by one thing and one thing only. That's crude oil. We had another 20-cent range in soybeans in the spot month, 29 to 09. Finished back on our highs near at 12.25, down 2 cents. The best performer on the day overall was wheat. July Chicago wheat finished on its highs at 6.25, up 15 cents on the day. That is a great recovery after we've had some whippy days there in wheat as well. The big resistance for July wheat is 6.50. We were at 6.50 last week. That's the highest price we've had going back to really February of 2025. So a good area, a good recovery. And the last time I checked, 6.24 was just about $1 higher than the contract low at 5.25, which we were at on January 2nd. So is $1 a bushel worth something to you? I hope it is. This is all coming from crude oil, in my opinion. The next big report we have is going to be the planting intentions on the 31st. It also coincides with the weekend that President Trump and President Xi are supposed to get together and talk about all things China and U.S. So that's going to be a heck of an end to the month. It's only the 13th day of the month here, so we're in the middle of the month. We have 2 more weeks. This has been pretty exhausting trade. Emotionally, I don't care if you're a bull or a bear. It's very stressful to see the markets whip around like this. However, from farmers and producers, just who I work with primarily, this is a gift. Remember how depressed we were in January when we had 10, we were looking at 1050 beans, and we were looking at 445 corn. So it's sad that this is the reason that we're getting this rally, but you don't want to be ignoring the gain in revenue. So I'm going to finish with this. Setting a hedge is not calling a top. Making a cash sale is not calling a top. It's not getting bearish. A good marketing plan is a combination of making good cash sales and holding on to your grain so you can sell it higher. If you're afraid to make a cash sale, you can absolutely positively re-own it with a call option. Put options are the hedge for unpriced grain. Call options are the hedged for price grain, and that lets you um, play the extremes here as this market whips around and we figure out where we're going to be. Anybody that can tell you with a straight face where they know we're going to be in July, August, I would quietly step away from them and suggest that they get some therapy because nobody knows where we're going to be, and that's why we hedge. Moving over to the uh, cattle contracts. Lower on the day, a whipsaw day, really kind of a tough trade. I would talk about March feeders the most. March feeders went down and made a new low for the year. We took out the January low, which had been 345.35. We took it out just by a little bit, 347.25. Got a lot of people thinking that it was going to continue to go down. And what did it do? Turn around and did a whipsaw and finished the day at 340.47. But there's a market that's trying to figure out what's going on with the stock market. Yes, we know the cattle herd's too small. Yes, we know all the issues with screwworm and the border being closed. But at the end of the day, 350 is a lot better than when we were down in November at 293. So there's still a lot of meat on the bone there. Same idea goes. Defend what you can. You don't want to get in a situation where if we did have a bigger than a 5 or 6% correction in the stock market, that it pushes cattle lower. So in my opinion, after doing this for 3 decades, the biggest risk now for cattle is not to the downside is not really anything other than a stock market correction. Um, the consumer continues to show up and buy expensive beef, and right now the packers are back into profitability. We will see on Monday if the Greeley uh, production facility closes down due to the strike. I didn't really see anything about that today in the news. We'll see what happens on Monday. For the day, June fat cattle down 40 cents at 228.95. Again, a 3 cent range there. For the day, March feeder cattle, a 4 cent range there from 51.80 to 47.70. Finished the day up 1 1/4. And in the hogs are at or near contract highs here. We've had a little bit of a pullback. Same idea. We've got April hogs trading at 93.5. Um, the not that long ago, back in November, we were down at 81. So I can't do anything really about it now because we're closed for the weekend, but certainly one of those things you want to be taking a look at because you don't want to get caught flat-footed if you can help it. And if you're looking for help, give me a call, 312-638-8868. I am Chris Robinson. Have a great weekend. And if you're not getting my letter, sign up for it, robinsonagmarketing.com. Call me with any questions in the comments. Have a great weekend.